All right, are we facing foreclosure crisis 2.0? And of course, when I talk about foreclosure crisis 1.0, we go back to 2007, 2008, when everyone was over leveraged and the bottom of the market completely fell out because people couldn't afford to live in the homes anymore. Their property values declined massively. They lost their jobs, and people that actually didn't even have jobs, they got no income, no job loans, ninja loans. They were forced out. They weren't able to actually live in their properties anymore, and it was a total disaster. Banks were writing mortgages backed by, they were crummy, right? They were absolutely crummy. Of course, we had the credit default swap crisis, so an absolute mess. That was mortgage crisis 1.0. All these companies, these banks trading these faulty, lumped together mortgage bundles that had awful, awful product inside of them. And famously, if you ever saw The Big Short, the movie, where you got to see individuals walking through properties that were part of the mortgages that they were holding in the bank and looking at the product that they had, looking at these single family homes and realizing that they were empty, they were broken into, there were squatters in them. So these mortgages were falling apart, and yet these banks were buying these mortgages up. It was a disaster, right? Now, after that, we had the Dodd-Frank Act. We had a number of different things put in place by Wall Street, by the federal government to protect us against what it seemed like Wall Street got away with. We bailed out Wall Street, of course, all the big banks. No one went to jail. It was unbelievable, right? The federal government, under Bill Clinton, under George W. Bush, were both pushing for Americans to own a lot of homes. They wanted us to be homeowners, right? At whatever cost, it didn't matter. Buy homes, buy the American dream, which is mind-blowing to me, because to me, buying a house you live in is not the American dream. That's a lie that we've been fed. The home you live in is not a performing asset, right? We know this. And yet, so you have this mortgage crisis from a number of years ago. Now it looks like we're having another foreclosure crisis upon us, but this time it looks quite a bit different. So if you look at a lot of the data right now that we're seeing in the retail space, so tonight we're going to be talking about the foreclosure crisis 2.0 as hitting the retail sector. Now, how many people watching right now have driven by a strip mall recently? They've driven by that, DSW shoe warehouse, or I don't really shop for shoes, but what are they called? The DSW strip mall places, and you got your burger joints in there. You've got, little carpet places. You've got, art places and things like that. You've got all kinds of, excuse the screaming in the background with the kids for bedtime. You've got, a pizza joint. You've got a burger place. You've got a Dick's Sporting Goods. The strip malls, right? They're all closed. They're all absolutely closed right now. And according to some of the data that I'm hearing from some of our friends in the business who own a couple of these strip malls, they're saying right now the rent on these strip malls that they're able to collect every month is down to about 10 to 20% collections. I have a friend who invests out in Arizona and also in Utah, and who owns a couple of these strip malls, and said their collections, they're not open. And so when you ask what type of tenant is in this property, it's your average person. It's your average business owner, right? It's your average business owner that has the pizza shop, that owns the Dunkin' Donuts, that has the the art store that puts frames around your art. All of those pieces right now, they're out of business. They're closed down, and they cannot afford to get customers in those doors. They cannot get customers in those doors because guess what? We're under lockdown. So they were always sort of living on the edge to begin with. I mean, how many of you think that little art store, that little frame store, was sitting on tons of cash that it could sustain itself for 4 months without having an influx of cash coming in from people walking through the door and getting new frames put up in their houses? They're not sitting on this amount of cash right now. And so they're not able to afford the rent. And you're about to see massive amounts of defaults. You're about to see massive amounts of foreclosures in the retail space. This is a huge problem right now. And so this is going to be a totally different environment that we've seen in the retail housing sector, or in the retail housing sector back in 2007, 2008. It's a totally different environment right now. And so I think this is going to be a big problem. It's going to, be interesting to see whether or not this trickles down into other areas. But it could be an absolute massive problem right now. And I think that you're going to see this hurting other sectors in a big, big way. If you have the retail job sector collapsing, that's going to be a huge impact on the people that are renting properties from people like me and from in high-rise apartments in that commercial space. So that's that's going to be a big, big problem. Now, fortunately, where I rent to our clients, our tenants in our properties, a lot of them are healthcare workers. They're not necessarily retail employees. But if we have a retail collapse, which I think we're on the precipice of right now, it's going to reverberate across the entire country. Now, this industry had only been hanging on by a thread to begin with in the wake of Amazon, in the wake of the big box distribution centers and everything else. And so you're having this major issue right now where I think that this could have implications across the broader economy. So, and if you have a massive amount of defaults, on the retail space, and all of these banks are left holding the bag on these strip malls that they can't do anything with, we are in for a world of hurt. Now, the commercial paper market collapsed, was totally wiped out a few weeks ago. Now, this is a big story. I'm surprised we haven't heard more about this. The commercial paper market that loans these 90-day quick loans to all these businesses completely stopped, completely shut down. So commercial banks right now trying to get funding is an absolute mess. And so you're seeing a lot of the larger commercial developers right now looking at how they can get some of that residential cash flow from from the mortgage companies that can do a 30-year loan. Under 5 units, if they can stay to 3, 4, under 5 units is considered residential property. But all of these strip malls where these guys have a mortgage with these larger banks right now, and they have no tenants being able to pay their rent on these properties, that's a huge problem. And what's going to happen to these strip malls? I believe these strip malls are going to be totally wiped out. How many of you watching right now think you're going to go by after this subsides in the next 3 months? Are you going to be able to go back to that strip mall that you're used to going to on a regular basis and be able to shop there and go back to your dry cleaner, go back to your pizza parlor, go back to your Panera Bread, go back to these other places that you're used to going to, your tailor, and being able to get your services? They're going to be out of business. Like I said, those who are already affected by Amazon and Walmart and Home Depot, that being able to just ship things right to your front door, and Lowe's is now moving more deeply into that space of having things shipped to your front door. There's no reason to go to that little shoe store anymore. And when you've got Zappos, you've got Amazon, you've got these big distribution centers, these places are going to be wiped out. And so what does that mean for us as investors? Well, it means if you're in the commercial space, you should be looking at these as an opportunity to swoop up and grab some of these residential spaces, maybe turning them into offices or other places, or getting rid of them and turning them into warehouse space that you can use for distribution centers. There's an incredible demand right now for distribution centers in this country to deliver boxes to people's front doors, to be able to take boxes in the way that we deliver these from Amazon and to get these to other places. We need these single-use warehouse places right now, and to be able to get these out there in the, whether it's ordering, like my wife gets a Fuego box, which is a hot sauce company where, hot sauce is delivered to your door once a month from a hot sauce club. Well, Amazon's that has nothing to do with Amazon. That's a separate distribution center sending out separate hot sauces in a separate box to your front door. All of the drop shippers and e-commerce companies that are making and shipping product across the country right now need these quick places to be able to distribute boxes to your front door. Remember, Americans love getting boxes shipped to us. And so in the commercial space, this is an unbelievable opportunity right now for people to maybe buy up some of these properties and to turn these into a commercial space that can be really useful for single-use warehouses. But I think the day of the strip mall, those stores, malls have already been decimated, except if they're the high-end malls. The lower cost malls are being crushed. So foreclosure crisis right now. Foreclosure crisis 2.0. What does it look like? It is retail. It is retail, strip malls, and malls. That is the foreclosure crisis that we're facing right now. Had a chance to speak with my good friend Ken McElroy in the multifamily space. He's plugged in with a lot of these guys right now that own a lot of these commercial properties, and they're being hurt big time as a result of their collections. So he is hearing also what I'm hearing, which is about a 10 to 20% collection from their tenants in these properties. That's awful. That is absolutely awful. I mean, I really can think the only kind of people that might be open at these hours or during this climate would be the people that have like takeout food. Who else? Maybe it's a pet clinic. That's about it. Maybe a pharmacy. That's about it. But a lot of these other places are being forced to close, completely closed down. So this is a huge problem, and I really hope that these businesses can get back on their feet. I'm praying and hoping that the government can step in and do some important things here to help these people get back on their feet. Now, how does this affect me as a rental real estate investor in the retail space as it relates to single-family homes and duplexes? Well, like I said, fortunately, we have not been hit by this in that way. It's a totally different animal. Because you have mortgages that are affordable, 2%, 3% interest rates, 30-year notes. Banks are being amenable right now and working with forbearance if someone can't carry the loan on a property. There's a lot more liquidity in that market, which is good. Also, tenants right now, we're seeing about, even speaking on some of the multifamily space, 80% collections, which is good. On the worst case scenario, so April, hearing from a bunch of my multifamily friends about an 80% collection rate from tenants, and those are the larger multifamily units. For me, this month on all of my properties, single family and duplexes, and actually I own a couple sixplexes as well, full collections. And we had new tenants moving into those properties. So our team right now is on the phone every day with our property management companies, making sure that things are running smoothly, and they are. But when people asked me last night on the live stream, foreclosures, are we going to see a big foreclosure? I really had to dive into the data today and look more deeply at this. And, you know, I was a little crass, maybe a little too fast to answer the question last night. For what I do in the retail rental housing space, I shouldn't say retail, I say the rental housing space, single family homes, duplexes, and so forth, way better off than the retail space, which of course is people that are renting out the strip malls and malls and actually paying a boatload of money for these leases that they can't afford because no customers are coming through. That's where you're going to see foreclosures. The guys that own those big 13-unit strip malls that are going to be absolutely crushed because they can't pay the mortgage. That mortgage comes due pretty quickly. And they're not sitting on a ton of cash. Remember, a lot of these people that own a bunch of strip malls, they might own one or two. They're not huge players. Not a lot of these guys are huge players. So when you drive by and there's a place up in Pennsylvania that I drive by on a regular basis, and it says on the windows, I think there's one store that was in this place. That was before the crash. One store. The rest of them are all vacant. There's weeds growing up. It was a brand new construction strip mall. No one's in there. No one's in there. There was one golf center in there where you could go in to get like fitted for golf clubs. That's it. The other ones are empty, totally vacant. And I would often say, my God, I feel bad for these guys. Like you've got these guys with these signs up that say, you know, for rent. I've been driving by this place for 3 years now, and I don't see anyone ever renting this place. That was before the collapse. The face of retail, folks, is changing forever. So we can all sit there and cry about it. But I don't know about you, I order so much stuff online. It's where I buy everything just about, except our groceries. And now that's moving online. During this virus, we've had so many people getting their groceries online delivered to their front door. Fresh Direct and Amazon and, you know, Whole Foods and everything else sending groceries right to your front door. So this is what we're looking at, folks. This is the future. And foreclosure crisis 2.0 is here. It's going to hit the retail space hard, hard, hard. It's already crushing them. And I'm just hoping and praying for our fellow friends that have stores, family businesses that have been there for 10 years, that they're able to pivot, to go into a different sector, or somehow be able to come out of this changed and think more about moving online with their product. So that's my opinion on Foreclosure Crisis 2.0.